Peter Eliades with you, Stock Market Cycles Update for Monday, February 10th. Well, it's getting exciting, folks. I know I say that a lot, but these are exciting times because we are in a very, very overvalued market situation. And that's why I've often said that every short-term top to intermediate-term top should be judged as a potential longer-term top. I know I've been criticized and trolled by a lot of people, not a lot of people, but several people that have made comments saying, you've been calling a top for the last 6 months. I don't think that's true, but I'll let you all be the judge of that. I've been picking out periods where I thought there could be some kind of short to intermediate term top, but we have not been in a position where all our longer term, at least nominal 40-week projections have been satisfied, and we are now in that position. So we saw them satisfied. We had that loop projection. I explained that to you the other day, and we're in the process of coming up to those loop projections now, nominal 20-day projections. But there are a couple of special things I want to show you now that point to the potential importance of this time zone. I think it was in the last couple of weeks that I mentioned the George Lindsay bottom to top count. Lindsay said, he was, for those of you who don't know the name, it's Lindsay, George Lindsay, super cycle analyst. He said that most market tops are preceded by a bottom to top count, and usually more than one if it's an important top. In other words, you measure from a bottom to a bottom, and then the next equal amount of time period could lead to a top. Well, we have, shown on the screen here, 3 bottom to top potential counts that are pointing to the next day or two. Maybe one of them is a couple of days out, but right within the next couple of days to a potential top. And let me show them to you now. I've tried to, rather than put vertical lines, because if you do that, they block out the highs, the lows that you're measuring from, but I put these horizontal bands. So this one is 503 days from this low, which occurred in February of 2016, very important low, to this low that occurred in February of 2018, another very important low. Those have been 2 of the most important lows of the last 3.5 years or so. The only one perhaps you can argue was more important was this one here in December of 18. But these 2 lows were super lows, and guess what? 503 trading days takes us into this time zone. I'll show you a close-up of these ending lines in a second, but I want to go over the other 2 patterns. The next one is 235 trading days, bottom to bottom. The first bottom occurred on, I may be a day off on these, but I don't think I am, April 2nd of 2018, and that goes to the bottom of, it looks like March 7th of 19. You can see this gray area delineating those 2 lows. And if you go forward another 235 days, again, it takes you right into this time zone. And the shortest one is kind of a half span of this 235-day pattern. You go to from the low of, this looks like March 11th of last year, to the low of August 23rd of last year, 117 trading days. Go forward 117 trading days, and again, you're in this time zone. Now let me show you this time zone, and we'll zoom in on it so you can see how these resolutions would take place over the next couple of days. Okay, here are the lines. 2 of them actually resolve tomorrow. That's Tuesday. And the next one resolves on Wednesday. So we have these patterns resolving in the next couple of days. There are no guarantees with these. What you do is look for these patterns, and it gives you, if everything else lines up, it gives you more confidence that indeed something important might be happening. So I wanted to show those to you. Next, we're going to look at the projections, the daily closing price projections. Remember, we've been showing you these projections over the past couple of days And this is a closing price projection for the S&P cash. By the way, the S&P cash is, I think, one of the few indexes, along with the NASDAQ composite, that went to new all-time closing highs today. So there's some little intra-market divergences going on here, too. But it still has not reached its upside projection in terms of a closing price. The minimum upside for a close is 3367.04. We closed at 5209, just about 15 points away, so just about 0.5% away. Should we close in this projection window on the S&P in the next day or two that matches up with those bottom to top counts, then we might have something going on for us here. Now, mind you, let's take a look at one of the other indicators, though. Let's look at the Dow, because they have quite a ways to go. It doesn't look like they are going to keep up with the S&P here. I mean, it's possible, but for the Dow to get up there tomorrow or the next day, we're talking about 29,500, 548. So we're talking about almost 300 points away. Let's say 270. It's about another percent away. Could we go up 1% in a day? Of course we could. And if we do that, then we'll get the Dow up to that point too. Notice the Dow did not close at a new all-time high today, not that far off. And we might as well look at the final one that we look at in terms of projections, and that's the New York Composite Index. That one is way far away from its upside projection, way up here. So the minimum upside on the New York close is 14,212. So let's say that's another 200 points up. That's about 1.5% up from here. So what we may see, if we're going to see if this is going to be a top of some kind, and I would rate it anywhere from a short to intermediate term top to a potential important top. Remember what I said about every top now will be treated as a potential longer term top. Doesn't mean they're going to be, but we're going to treat them with that potential. So that's what the closing price projections look like. One of the other things I wanted to show you was some of the patterns on the monthly Dow chart. So this is a monthly chart of the Dow Jones Industrial Average. Kind of blocked off by my ugly little face over here, but you can get the point. If you draw a trend line, this is on a log chart, a logarithmic chart, from the 1929 high to the 2000 high. Actually, this line would go through the high around 94, 95. The 2000 high doesn't quite get up to it. But it's the most external highs on this trend line, showing you two of the most overvalued markets in history. You can see we're getting pretty darn close to getting up to that area now. I looked at this and tried to figure out where that line would be currently, and I think it's around the 30,200 to 30,400 level. We don't have to get all the way up there, but that's what we're looking at. Two of the most overvalued segments and time periods in market history, and we're coming very close to that. But look at the other thing that's happening here. This is a Fibonacci relationship that I did the other day. And again, I'm trying to move this chart over, but it's not easy to do. Let me see if I can do this. Okay, if I do that and move the beginning of the chart, we should be able to see now. Okay. So I was measuring from the 1942 bottom, and I'll go over once more. So that's right here, using the 42 low that occurred in April of 1942, and then take a measurement out to, stay with me on this, this is potentially important, out to the very important low in December of 74. I think to make it match up, I think I actually had to go forward one more month to January of 75. But watch this as I click on this line here, and it gives us all the Fibonacci interrelationships. Okay, see where at the top it says based on the industrials, trend beginning date, April of 42, Trend beginning price is not important. Trend ending date, January of 75, 1 month away from probably the most important bottom of the last century. And the 1942 bottom, by the way, not quite as important as the 1932 bottom, but probably rates on a equal basis, 1932, 42, and 74. Those are the most important bottoms of the last century. So, but look how these things line up. A 0.382 retracement takes you to July in 1987. Well, I think most of you know that a month later, August of 87, we had the top before the crash, a 30 or 40% decline within just a couple of months. The next date that pops up, October of 07. Sound important? October of 07 was again one of the most important tops based on the following market action, which saw the market go down 55 to 60% from that high. And look at the next date after that, 1.382 from that time span between 42 and 74, 75, April 2020. You might want to copy the 1618 down for a future reference. I don't know, I guess 7 years away is not that far away, but December of 2027, might want to copy that one down, as I said, for future reference. But we're in this time zone where some very interesting things are scheduled to happen. I'm going to show you the charts that I put in my report that I wrote 2 or 3 weeks ago when I said, in fairness to people that were paying for the report, I would not give publicity to that report online here. But now is 2 or 3 weeks later, so I don't think anyone will complain if I show those charts to you that people had to pay to see 2 or 3 weeks ago. They again point into this time zone, January, February, March, April of 2020 as a potentially very important time zone. So I hope this has been helpful for you. We're going to be following this day by day very closely because we are in a time zone that could be dramatically important. Thanks for watching. If you haven't subscribed yet, bottom right of the screen, please subscribe. Ring the bell, click on the bell. When you do that, it'll give you notification of all the updates that we do as soon as we put them online. It would be nice if you'd make some commentary below. We notice we've been getting some thumbs down, and it seems to be from the same people because for the first several months, there were virtually no thumbs down, and now almost every update is getting 1 or 2 thumbs down. I don't know if it's the same people or not, but if that's the way you feel, I'm not going to argue with you or complain about it. I don't like to see it, but if you'd like to make some favorable commentary, please do so. If it's a criticism, please let me know what it is. Thanks a lot for watching.